Good morning, traders. Paul here with GammaEdge. Today is Wednesday, the 4th of January. Let's get started. Pause your players here. Read to the bottom. If you agree, hit that play button. Summary for today, we are still cash short on the short-term timer as well as the long-term timer. Of note, the right goalposts, positive gamma exposure remains at 4,100. That's notable. -X dropped though. When we see -X drop, that is typically due, especially with the day's action that we had yesterday, that's typically due to puts being closed and revealing a downside level. So we were at 38. We are now at 3,700. You'll see on the last slide here that 3,600 is very, very close in magnitude, even from where we are up here at 38.25. That's notable. That means people are taking advantage of cheaper puts to the downside, or they are being exposed as the 3,700 strike is being closed. We do think this is an early sign of near-term bullishness, but just note the overall structure is bearish, and we don't see a rapid advance from here. To that point, we would like to see OTM calls being added above us and ITM puts being closed. We're not seeing that right now. We do think just with current structure we have, we're limited to about a 39.20 close. We may push higher intraday, and I don't want to hear anything from folks that, we went to 39.50 or whatever. This is not an exact science, as most of you who are experienced are aware of. But we don't see a close above 39.20. And I think that's important, at least not today. We need to see a structure change, and we're not yet seeing that. To the downside, very put dominated. When we see that type of structure, until we start seeing some closing of those OTM puts as people give up and realize that they're probably not going to go in the money, until we see that, we're basically going to be locked in this particular area. So while we have this heavily put dominated area, the structure pressure is for dealers to continue to sell as theta burns off their hedges. That's called charm flow. Taking a look at the timer model, it all starts here with the timer model. Now I'm showing the USC. Of note, yesterday was the first day in many where we actually have a positive 52-week new high outpacing the new lows. Not by a lot. You can see the difference here is not very large. 42 differences, 42 is the difference between the two. But nevertheless, this is a necessary but not sufficient condition to seeing the bulls actually start to advance. And so we like to see this kind of thing where if you think of a bowling ball analogy, the bowling ball has been hitting against that left bumper, and now it's coming across the lanes and actually just started hitting the right. And so the magnitude is as that bowling ball comes across. So effectively, we're not hitting the new lows. We are starting to hit some new highs, and we would want to see the breadth indicator here start showing more new highs, 52-week new highs as we go forward. We are very, very early. Yesterday's action, aside from the opening book adjustment that you see here in the SPX and this linear up, virtually nothing happening throughout the day. So we read this as no institutional pressure. The big boys and girls were basically sitting pat, just digesting, still on holiday, whatever the case may be. Long-term trend is still down. The slopes are pointed down. I've highlighted this area. You can see the bolded white is the cumulative tick. And independent of price action, when we don't see corresponding moves that are linear, that are pushing us higher and into the ribbon and eventually above, it's going to be very, very difficult to call a bull. We absolutely need to see buying pressure. We need to see institutional buying pressure, and we're not seeing it. We're seeing flatness across the board, not a lot of participation going on, so liquidity is poor, and that's why prices are moving all over the place. Key levels, like I said, the 3,700 level has dropped. Of note, we're pushing a little bit higher volatility, so I would still expect some volatility going on. We would like to see this number actually come down. It's hovering now in the higher range relative to where it was last week, so just be aware of that. Up here, 4,100 is key, and then the COI, call open interest and put open interest levels haven't changed. On the PM settled complex, this is that 3930, 3920 area that I think is going to be really difficult for us to break north of. You can see that we finished right here at the bottom of the PM settled transition. We think that's important. We actually called that out yesterday, by the way. I would urge everyone to go back to yesterday's morning call and review those notes. To the downside, 3800. So you can see, though, we've got a double structure sitting right here. We've got this 3750, a lot of negative put-dominated type of gamma. We call put gamma and delta negative here. And so a lot of puts are dominating the conversation. We're starting to see, maybe the early stages of some call-dominated structure start to develop, but you're not going to see this in the combo complex. And in order for us to advance, we absolutely need to see both. 0 DTE, incredibly tight transition range here today, sitting right here at 3820, 3825. Typically when we see a tightness like this, we can break either way. So we are mindful of a push upward. The 3860 level is where the mass on the call side starts to play. This 3785, 3775 downside will be very, very important in today's action. If we lose that, we could snap lower and then reverse right back up very, very quickly. And I say that in part because we are starting to see really far down puts being closed and some emergence of the call structure. But again, this is the 0 DTE, right? So these are all coming off today. But intraday, this will matter because these exist until they're monetized or until they expire. The 1 DTE, 1, 2, 3, and just trying to identify potential pinning areas that we have. We're getting a little loose here in the transition. It's balanced. That's why this is loose. Don't read a lot into this. 3900, 3775 are key levels. This one's a really hard one to estimate on. Tuesday, Thursdays have not been overly strong. This Thursday is actually very, very balanced and is not really telling us much. Taking a look here at the SPX Combo, which is the AM and the PM settled complex. Here's the transition. We finished right at transition. Some parking area candidates that we're looking at. Note this 3900 has got kind of this lone survivor of negative gamma that's sitting out there. Fairly strong negative delta also, right? So we've got a lot of in-the-money puts that are sitting right there. If we start pushing up, these folks may be inclined to close those, but again, open interest and time to expiry will really drive that decision process. You can see to the downside, just completely put dominated in the deltas and of course on the gammas, and with some really large magnitudes on the gammas. So if we do slip below 38, we could get caught in a tractor beam, and it could be pretty ugly to the downside. So be aware of that. To the upside, difficult to progress. We need to see more positive deltas appearing, and the only way we're going to get there is by adding calls, long calls. That are out of the money, of course, and closing those in the money puts. So as price advances upward, people will start getting worried that they're going to lose their profits on a short-term basis, and they close, revealing more positive. We don't see the structure here, and hence this is a negative going structure, and we feel the dealer pressures are going to be to the downside, at least for today. Taking a look at what's balanced or remaining for the balance of the week, still net negative expiry. This is today, tomorrow, and Friday. You can see again, we're right at transition. It's no wonder we closed here. If people think, why do we close where we close? A lot of it is all structure. We've been calling this out and put some notes on the Discord about this. To that upside, that 3920 appears to be a range. I mean, if we can get above The 3900, it opens up the door. You can start to see some of the deltas, and even the negatives that are here are not very large relative to how they could flip over to a positive delta. So we're starting to see the potential of this week of a movement higher, short-term gamma, short-term delta, but nevertheless we need to see more and more green. The fact that we have net negative coming off generally bodes well. If we continue to erode negative day over day, week over week, what's left? Positive. And that positive is typically, if you believe price goes where delta goes or where gamma goes, we could be going to the north, but probably not today. And if we do move within the range today, again, that 2.7 is right up into this area. I don't think we're gonna push much higher than that. You are here, 38.25, sitting right there. Transition's starting to clean up a little bit. We'd like to see this. We'd like to see this positive gamma drop down. We'd like to see basically the two levels here, the 3850 and the 3900, get absorbed. Basically just become a little spike like this, and then that opens the door up to 4,000 and 4,100. So something to pay attention to, and we'll see where that goes. This downward spike is actually the end of March. This is the new JPM roll at 40.65, and this is the end of January spike, which is up at 41.45. So you can see that these are already starting to appear on the horizon. This is interesting down here. We were dominant, and we have been dominant with the exception of obviously Friday's 38 to 35 expiry. But we've been dominant here at 3,800 for a while, and you can see that minus GEX now has dropped down to 3,700. Close proximity is 3,600. This is indicative when you don't have an emergence of a large spike in gamma here, which is short-term options, right? When we don't see that emergence here, this is more likely due to the closing of contracts below us, which is speculation. These are out of the money puts right now. And when we close the 37, or excuse me, the 38, it exposes the 37 and the 36. Now, we also can take advantage of the cheaper prices, especially with, skew being what it is. And potentially we could be adding to these downside protection, hedges and just, preventing our portfolios from self-destructing in tail risk. So, when we look at this and we see this drop from 38 to 37 and this remaining high and cleaning up of the transition here, it does set the stage for a potential move higher. So I want everyone to be aware of that. Not saying it's going to happen, not yet, but we are now starting to see some of the transitions that are necessary in order to advance, and I like to see that. So with that, I'll leave you. If you have any questions or comments, come join us in the Discord. We have lots and lots of great traders, good support group. Follow us on Twitter at GammaEdges with an S, and here on YouTube, subscribe and smash that like button if you like today's commentary, so that I know immediately that I'm providing the value that you need. So with that, make it a great hump day, and we'll see you in the Discord. Thanks.